All right, let's talk about Fibonacci sequence and the Fibonacci numbers. And why are they important for trading? Now, the Fibonacci sequence is characterized by the fact that every number after the first two is the sum of the two preceding ones. Okay? So what this means is, look at this sequence right here. Start at 0, and then 1. So if you go 0 plus 1, that's 1. 1 plus 1, 2. 2 plus 3, 5, and so on. 8, 13, 21, and it goes like that. Now, this is a sequence that is found in many mathematical areas and also in living organisms, okay, which is also called the golden ratio. Now, if we go to our chart, the Dow Jones here, the index, go to the left side on the tools, you're going to see here Fib retracement. That's what you're looking for. Now, let's draw one right here so you can see. Now, the most important extensions of this that you want to keep an eye on are in green over here: 0.382 and 0.618. Okay, we also want to keep in mind the 0.5. So how do we use this? Now, for example, this we can use to see how far a price is going to retrace after an impulse wave. Okay, this could be used in an uptrend and in a downtrend as well. So let's try here in the uptrend. It can also be used in any time frame that you want. So we're in a daily right now. So we're going to take, what you do is you take the bottom of a move up until the top of that impulse move. Now, what you want to see is when we're in a bull market, a stock retrace to the 0.382 area. That means it's a pretty bullish move. But also it can go down if this breaks, it usually just goes down to 0.618. Okay, so if you can see it here, you hit perfectly onto it. Also, remember that I said we have to keep an eye on the 0.5 as well. Well, that could also be a support line, okay, for the retracement. So this whole area that we see right here could be a retracement, right? And that could be a buying opportunity. What you want to see is that the price does not close, okay, and open under, let's say the 382. See how here it didn't hold it, it just opened, it just closed here and opened under it. Well, that's a sign that it most likely is going to go to the 0.618, which is what it did. And then what happened, it closed and then it opened above the 0.618, and then after that, it's rallied up, which is what you want to look for. It's rallied all the way up. Now, there's only one example. We can keep looking at impulse waves, see how they're doing. For example, this one. So this bottom and then this top over here. Boom. See, it held at 0.382 and then it just rallied up from there. So that's what you're going to keep trying. Keep looking at the impulse waves, looking for the buying opportunity. Right here. So 382, that's a nice buying opportunity. And also every wave. Let's look at this. See how this one held the 0.5 actually? So it held 0.5. This was a little wick that went down, but it didn't close under the 0.5. So that gives you a buy signal because it didn't close and open under. So this right here was a buy signal. And then what happened is rallied all the way up. So you want to keep looking for that. You just want to keep trying from the bottoms of a move to the tops and then see how much is going to retrace. And look for those three key numbers, key support levels for this. Now, this also works in a downtrend. Okay, for example. What do you see here? because it's going down right here. From the downtrend, but what we're doing, we take the tops instead of the bottom. Start from the bottom. We start from the top, and then we take this bottom here and see what happens. Boom! It retraced to 0.618. Usually on the bearish moves, it'll go to the 0.618 more often than the 382. That's one to keep an eye on as well. Okay. So this works either way in any time frame. So let's go to an hourly chart. Right here. Let's look at these moves right here. This bottom and the top. See how this held right here in this area. And this is not perfect or exact. It's not going to be always hitting the numbers exactly, but like I said, you have the area that it's going to retrace to. So see how it is retraced in this area. It didn't go down this little box under that box, and then after that, it kept going up. So that could be a nice buying opportunity. So you gotta keep testing on every single move. So this one right here, the little one, you on this little one, boom, retraces 0.382, and it kept going up. So it's always same as this one. The next one, see how we started on the bottom, right here, little move, another impulse wave up, retraces 0.382, and then keep going after that. I was going to keep an eye on 0.382, 0.5, and 0.618. Now, if it breaks 0.618, for example, let's see. Look at this whole move right here. So it actually bounced off the 0.382. It continued, it rallied up, but it couldn't hold it anymore. So see what happened? It broke it. So it broke it right here. That'll be a sign to get out because it just broke the last bottom. Okay, and then what happens? You want to keep an eye on, see if it goes straight to the 0.618, like I said. But what happened here? It didn't. It didn't hold 0.618. That's a very bearish sign. And it just broke all the way down back to basically the beginning of the move. So it double bottomed at the beginning of this move. So if it breaks a 0.618 support, that's a warning sign. You want to keep an eye on it, and you don't want to get in there because it's not going to be a safe move to do. So if it breaks that, so let's recap here. If it breaks the 0.32, look for the 0.618. Now, and if it breaks the 0.618, that is bearish sign. You want to get out because most likely we're going to go down all the way down to the beginning of the move. It also works on the upside. Okay. So if we're going to see, if you're in a downtrend, right here. See how I tried to hold the 0.618 over here? So I held it and then tried to keep going down again. But it couldn't do it, just like the other way. Found resistance on 0.5. And then what happened? It broke it and it just rallied up. So we're looking at this in the inverse way. As if it was a downtrend, so it goes up. So instead of being bearish, it's going to be bullish on this side. So if it breaks the 0.618, it's going to be a bullish sign. Okay. So just keep an eye on working it both ways and keep trying, keep testing, because it's just not 100% accurate. So it's more like an art, I would say. You have to keep trying, see what you find. See how it held this area right here, and you just rallied up. And you can keep testing. Oh, maybe this leg works better. It didn't hold the 0.618 on this one, and it broke down almost back to the beginning of the move, and then it rallied up again. But you just don't want to get in just hoping that it's gonna go back to your entry point. Like I said, hope is just not the best thing to do, to use for trading.